Just in case, the guideline is to continue the conversation. Last time my electricity went, so I was away for like 5 minutes. So the panelists...
We are starting, Ali. We are on YouTube. We are starting.
Okay. Hello, everyone, and welcome to our new theme, Microfinance in Focus, in our ICCIA Leadership Talks. My name is Alia Jaffer, and I am Director International Relations. So very excited to have an excellent lineup of speakers. The Microfinance in Focus series has 2 sessions. Today's session is going to talk about the impact that COVID has had on the sector and also touch upon the outlook for 2021. Microfinance is a very, very important instrument in the move towards more and greater financial inclusion, particularly with reference to creating resilient economies and activity at the bottom of the pyramid. And over the years, what I sort of discovered is that microfinance is no longer just about giving money, borrowing and lending. Now it's become a lot more, and it's a very important platform to not only provide financial access, but also capacity building, helping micro and small enterprises grow their businesses with the support of the microfinance sector institutions, banks, as well as foundations who are actively working in this sector. So to learn more from our speakers, let me invite and introduce all of them. We have Mr. Steve Hollingworth, who is the CEO of Grameen Foundation. We have Mr. Nabil Ghalib. He is the Director, Economic Empowerment Department, Islamic Development Bank. Mr. Ahmed Osman, who is the Chairman, International Council for Small Businesses, and Mr. Martin Farr, who is the Senior MSME Specialist from IFC. Welcome, everyone. So happy you could take out the time and join us from all parts of the world. Okay, so we'll start with a brief introduction from the speakers about their organization and their work in the microfinance sector. So Steve, we'll start with you. Please, over to you.
Yeah, you make sure I'm unmuted. Hi, good morning and good afternoon, good evening, everyone. Thanks so much for the opportunity to gather. I think it's important to note what is impacting the world at the moment with this pandemic. There are essentially 3 main crises impacting at the same time: the health, the economic, jobs, income, as well as a food security and crisis. And there is, strong evidence that the rate of impoverished people globally is going to increase anywhere from about 8 to 10%. And it's going to also have a significant impact on newly graduated poor who've gone up in income level on some of their basic needs. So we can anticipate, I think, a very, very large shock as a result of this pandemic, and its impact on microfinance is also being seen. In particular, there's been a big increase in non-performing and restructuring of loans. The microfinance sector tends to be skewed towards a few very large microfinance organizations that do have significant equity and can weather this. But there's a disproportionate impact that this pandemic will have on loans and on lenders into microfinance organizations, on smaller and medium-sized ones. So at Grameen Foundation, we've had a history of supporting the microfinance world. I'm going to share my screen if I can, and our inspiration, of course, comes from Professor Muhammad Yunus, who is, of course, the founder of the microfinance movement and our founder, our inspiration. At Grameen Foundation, our focus remains very much on the poor and creating a world without poverty. But over the last number of years, over the last 10 years or so, we've really made a very significant shift away from the traditional paper-based microfinance records, the traditional paper-based money transfers. And we've really become almost exclusively involved in how mobile money platforms and how data, information that can be transferred to poor clients, to field workers working with poor clients, with agents and organizations that we support, how data can complement the mobile money platform. So combining both mobile money and information in the hands of very poor women. And what this involves for us is essentially creating a cadre of community agents. We're very proud of the fact that over the last 8 years, we've enabled over 300,000 digitally enabled community agents who work in their communities, providing access to financial services, information, and resources. They're women primarily who reach out to other women. And one community agent can serve in a community anywhere from 150 to 1,000, in South Asia, 1,000 community members. And essentially they're a vital link. The community agents are a vital link between the community and access to mobile money, to information that can come to the community agents, but also information that can be derived about the community agents. And also farming and digitizing the value chain in farming is very related to this. So in everything we do, think about technology in the hands of remote rural women, leading the education and support to their communities to use that technology, and how the information flow to and from the agents and the communities becomes so important in helping to structure the right kinds of support. So, this really is to represent what's happening, with the onslaught and the growth of mobile money. There's now over 1 billion active users of mobile money platforms. What's happening is that we're able to create a variety of relationships through the agents and through mobile devices to rural communities that provide a wider array of types of financial support to rural communities. It's not just a microfinance organization with a relationship to a group or to a community member anymore. It's actually a number of different enterprises that can link in through the agent and provide a whole variety of types of services. We have a variety of platforms. The most notable is a platform called TaraWorks, which is a client relationship management platform that's used very extensively to complement the mobile money channel and to help educate agents and to gather information about agent performance and data. And this is becoming increasingly important as microfinance organizations in particular are under pressure now, with physical movement, with their ability to transact in cash, et cetera. We believe the transition to digital is really being accelerated. We're seeing in our India program, for example, over the first months of the pandemic, an increase in transactions through our mobile agents of over 200%. So it's going to be a critical factor, much like us now interacting virtually in so many different platforms. So with that, I'll turn it over. Thank you.
Thank you. We can move on to Mr. Dr. Nabil Ghalib from Islamic Development Bank.
Thank you, thank you, Alia. Thank you very much for inviting me to be part of this interesting panel, and my greetings and thanks go also to the attendees and the audience for availing themselves to be part of this debate today. If I come back to your question about introducing the organization and talk specifically about our contribution to the field of financial inclusion, I think IDB is very well known as a multilateral development bank established in 1975, and we have 57 member countries across the 4 continents. Our main mission at IDB is to promote really the comprehensive human development with a special focus or on the priority areas of alleviating poverty, improving health, promoting education, improving governance, and bringing prosperity and dignity to the people. So this is our main mandate at IDB, and it's very, very well known by most of the people dealing with IDB. So IDB is the only multilateral institution that promotes Islamic finance, which is a kind of ethical and social means to provide financing without interest charges to beneficiaries. Our contribution in the field of financial inclusion, and when it comes to serve poor people, since inception, we started really supporting hundreds of projects with approval exceeding $1.5 billion to back directly interventions that target the financially excluded people. And this intervention includes deployment of special programs backed by financing, backed by technical assistance, backed by capacity building programs, and so on. So, of course, it goes without saying that all our financial institutions, our financial tools are Sharia compliant as per our mandate. Now we are currently holding a portfolio of more than 17 fully-fledged microfinance projects and 39 projects with the kind of microfinance components that target diverse sectors like agriculture, trade, and service. And the bank has undertaken a number of initiatives. Just to name a few of them, we launched the vocational literacy program with $500 million. The microfinance support program with $500 million as well. The YES program with $250 million. The mini SMEs funds and mini education programs also have been launched by IDB, and we mobilized many international donors and partners to join us in these efforts. On average, the bank allocates over 10% of its financial support to women and youth development on an annual basis, which is a great amount in my opinion. The bank also is supporting the financial inclusion through direct equity participation. So we are also investing in the equity capital of very selected financial institutions that have substantial impact in terms of financial inclusion and job creation. What else? I think the bank also is very interested to develop the policies when it comes to fine-tune or improve the financial inclusion efforts. We are publishing on regular basis policy papers on financial inclusion, on Islamic microfinance, on women, on youth empowerment, and so on and so forth. Recently, we have also joined the G20 GPFI as a permanent implementing organization, and hopefully we will contribute significantly in the efforts of this high-level forum to fine-tune the policies of financial inclusion all over the world. Our between quote unquote success has been very well recognized in the field of social and ethical finance. We have been awarded by many prestigious and high-level forums like the Ethical Finance Innovation Challenge and Awards, by Reuters, by SICA, by the International Forum of Excellency and Creativity. And this actually recognizes the innovation that is promoted by IDB among its implementing partner financial institution. So that's it for your first question. Over to you, Alia, and I will elaborate on the different initiatives undertaken by IDB as we go during the discussion. Thank you.
Thank you so much for that. And yes, definitely we'll come back to some of those areas. Now I'd like to invite Mr. Ahmed Usman to share with us his organization's work.
Thank you very much, Alia. I'm very pleased and honored to be with very distinguished panelists in this discussion on microfinance in a very, let's say, a very timely webinar within the pandemic the world's going through. So just to give you a brief introduction, the International Council for Small Business is the world's oldest, let's say, non-for-profit organization supporting small businesses worldwide. We were established in the United States in 1955, and we have presence in over 80 countries supporting small business owners globally. We bring together educators, researchers, policymakers on one common goal, which is basically to support small business owners through sharing knowledge and expertise and producing different types of research and capacity building programs and training certifications in the different fields supporting small business. One of our major achievements was that we were the originator of the United Nations resolution to announce June 27th as the MSME Day worldwide. We gave in this resolution back in 2016. It was announced by the United Nations that the MSME Day in 2017 was to be celebrated throughout the world and celebrating small business owners, micro business owners globally. So at ICSB, in a nutshell, we bring together the researchers, policymakers, and educators to support small business owners globally. So this is a brief introduction about this. Thank you.
Thank you so much. And now, last but not least, we have Mr. Martin Spar from IFC.
Thank you very much. I would like to thank the organizers of the ICCIA Leadership Talks for inviting me to this event. The IFC, the International Finance Corporation, is the private sector arm of the World Bank Group. We engage with the private sector to reduce poverty and to boost shared prosperity. Microfinance is a key sector in which we have been investing for at least 25 years. One of our main goals is to establish microfinance as a new type of asset in order to ensure that private sector investors go and invest in this institutions. As we know, the public support would not be enough to finance the needs of the microfinance institutions all around the world. As of June 2020, IFC has an outstanding portfolio of more than 1.3 billion in microfinance institutions, MBFIs, microfinance investment vehicles, comprised by 221 active institutions across 52 countries, reaching 55 million micro and very small enterprises. More than half of these projects are in IDA countries, with 17% of our investments in fragile and conflict-affected countries. To date, IFC has made more than 650 microfinance financial inclusion investments totaling 6.1 billion and implemented 295 advisory projects in 95 countries. Before I leave the floor back to you, I just wanted to echo what Steve said at the beginning. We see also in our work, this is something that we can elaborate later, that digital financial services is becoming the new normal. And we see that this will really change the life and the way microfinance institutions operate in the future. So what Steve mentioned about the different players which are popping up in the different markets and are creating an ecosystem around the microfinance institutions, and the capability required by the microfinance institutions to link into this ecosystem will be crucial. On the other hand, as we see several microfinance institutions, the capabilities of the microfinance institution to benefit from this trend depends on the level of digitization before the crisis started. We see several institutions which have not been prepared to for this change, or this swift, this dramatic change from one day to another. So they are not benefiting, and the question is how we can support them to, on one hand, benefit on the one hand, support the end beneficiaries, and at the end, on the other hand, to make sure that they continue providing their services to the bottom of the pyramid. Thanks. Back to you, Alia.
Thank you so much for that introduction, Martin, and some very interesting numbers over there. Now, I'd like to talk about, we'll go back to Steve and talk about Grameen's digital technologies. You shared a little bit about the different sectors, and you also shared that that Grameen Foundation has invested in own assets that are sort of driving these for the benefit of the supply chain. And you also talked about the food supply chain impact, which, you know, with the growing food insecurity, I think that is, and primarily most of the microfinance consumers are related to agriculture. Correct me if I'm wrong. So this would become a very important tool for even the food security improvement. Now, which aspects did you think were most vulnerable during the COVID, and what were some of the initiatives that were taken by Grameen Foundation to overcome those challenges?
Well, you know, pre-COVID and during COVID, there's a basic kind of trend that we're all dealing with, and that is the digitization. The Internet of Things, the fourth, fifth industrial revolution, and essentially our work is about how does that reach the poor, and the critical issue really is how does data that's important, information that's important for key decision makers get in the hands of those decision makers? That's the key issue. I've been a lot of years in the development sector, and I've been to many offices where I've seen officials with large stacks of paper files behind them, right? And, we never had the ability to slice and dice that information to understand, who was the most needy, who was doing the best job, et cetera. And now with digitization and with, data flows, we can actually inform decisions and slice and dice information and understand it. And that's really the asset that we have now. And we're becoming much more agile at understanding the needs and the opportunities of a poor person based on the digitization of information. So that's the big opportunity that we have. So, in our work, we work primarily with what we call client relationship management softwares, which essentially can be configured based on the business model of the MFI, of the agricultural buyer, the agricultural extension worker, et cetera. It can provide information on mobile platforms that needed to train and support the extension worker. It can provide information to the farmer or the small business holder about what they, ways that they can, improve their productivity, their profits. And we can also derive information about the performance of the field worker and the performance of the client that helps us understand better who's at credit risk, who's not, who's adopting the right practices, et cetera. So that's a very powerful tool, that we have. And I believe a very, very urgently needed one at the moment, particularly when you're talking about the critically poor and, the rise in poverty levels and what's happening really with the need for direct cash transfers. That's a sector that's expanding greatly. The number of host governments now that are expanding direct cash transfers, the ability to use data, on household livelihood, on cell phone transactions, on, impoverished regions of the country and target, the delivery of, of cash transfers to the most needy can be done very, very agilely through mobile data. And it is being done that way too. We're involved in that now in 3 countries, in the Philippines, in India, and in refugee camps in East Africa. But what is being lost, essentially, I fear that the depth and the length of this pandemic and the inability of many of the developing world governments essentially to print money like the West has been able to do, right, to sustain, a population. Much of the developing world is not going to be able to do that. It's going to have a marked impact not only on poverty levels and food security, but it's going to have a significant impact on the depletion of assets and portfolios of the microfinance world. So, this connection through digitized data and outreach through mobile phones and, expanding the use of them is really, really critical. Like I say, like we're transacting all of our lives now online. I think the global poor are looking, to transact theirs on mobile devices.
Sorry, I kind of lost connection over there. Okay. I take it, Steve, that you have finished.
I think I did. Did everybody else hear me? Right. Right. Okay.
Yes. Steve,
okay.
At least here.
And yesterday in the conversation that we were having, we also discussed some of the challenges that were specifically faced by the agents due to the lockdown, with everything shut, and some of them should have been declared as essential workers, which I think did not happen.
That's correct. Some countries, of course, have had much more aggressive shutdowns, isolated areas, and I can compare a number. Philippines, where we're very active in, for example, they did not allow the movement of mobile money agents, and that really impacted transactions. In India, they did. They allowed them. They declared them essential workers, and that supported this massive increase in the use of transactions. Of course, India is a country to watch in terms of what it's doing with mobile, with a digital economy in general. I'm sure folks are very aware of the India Stack, the JAM it's called, an acronym, India acronym, and essential to that is the biometric identification of clients and the payment of government payments directly through mobile devices, through mobile agents such as ours. So yes, agents have suffered tremendously, and often in agricultural value chains too, as exports and imports have been hindered. That's impacting some of the higher value crops that we've tended to work in, cocoa, coffee, crops like that, and that impacts the work that agents can do.
Okay, thanks. Now, I'd like to move the conversation from an investment perspective. So we have IFC, which is one of the largest funder of microfinance sector. So Martin, would you share with us some of your learnings in terms of the performance of your investments and the risks that you were exposed to?
Yes, just as a reminder, the World Bank new poverty projections suggested by 2021, an additional 110 to 150 million people will fall into extreme poverty, living on less than $1.9 per day. So this is, of course, and some of them will become micro-entrepreneurs, but most of them will have to go through a critical phase. And this, of course, has an impact on the microfinance institutions we work with. The MSMEs, the micro, small, and medium enterprises, are particularly impacted as they are vulnerable, more vulnerable than their larger counterparts, because they have limited buffers and their access to credit is more limited. And of course, the crisis is heavily impacting the informal sector. We estimate that more than 2.7 billion informal workers globally are affected by the lockdown. So 87% of the informal sector workers have been impacted by the lockdown. In a later stage, I'm going to talk about the lockdown and how it is moving in several countries. But for the time being, this has been a huge impact, which of course had impact on our clients, and not only our clients, but we have been observing it on our clients. So what is the first impact that we see? Of course, MFIs, and so microfinance institutions and others who are providing services to the MSMEs are experiencing disruptions because of their operations are reducing the liquidity, having liquidity issues, and of course the impact on the quality of the assets is also very strong, because the clients are having problems to repay, either because the business is closed or because they are not able to move to the branches to pay. And so in the short term, we see liquidity issues, which are impacting on the microfinance industry. But in the medium term, we are also seeing solvency issues that will begin to arise, as there are significant risks that repayment rates may fall as borrowers struggle to manage the crisis. So enabling the sustainability of the MSMEs operations could mitigate the impact on economic growth and livelihoods. So what we see is that the government, if the headroom allows it, are supporting directly the microfinance companies, which is then having a positive impact on the microfinance industry. But the impact, what we have seen all around the world, depends on the type of institution we are talking about, the measures taken by the different governments, and the type of clients the institutions are exposed to. So one example would be rural against urban. So the impact on the different clients is very relevant. So when we talk about the type of institutions, we at IFC, we have divided them into regulated and unregulated, and into deposit and non-deposit taking institutions. And depending on the type of institution that you have, there are different characteristics which differentiate them. So in terms of capitalization, in terms of activities that they are allowed to perform in terms of legal status and in terms of the way they are regulated. So this is from the institutional point of view, and IFC is mainly focusing on deposit-taking institutions which are regulated. Yeah? So we are targeting mainly the upper end of the more sophisticated, more developed microfinance institutions, which of course it depends on the country. And as I mentioned before, we are also exposed to conflict-affected countries. But in many cases, we are trying to work with those who have been, who are the leaders in the market and which are providing supervised and regulated financial services. When we look at the measures taken by the government, just as a reminder, we have the local lockdowns and the social distancing, which had a temporary suspension of the microfinance operations. This was mentioned by Steve, where digital means, digital channels have played an important role. We have seen relief to borrowers with moratoriums which have been imposed or suggested by the regulators. We have seen support to the MSMEs, and we have seen direct relief to financial institutions. For example, regulatory easing in regulatory requirements on liquidity and funding support. And of course, what we have seen is that the governments have lifted some regulation which have been in place to e-payment services. I don't want to go into details because Steve is looking into this. And last but not least, depending on the way the institution started the crisis, it's impacting in a different way. So we have seen that some microfinance institutions started the COVID crisis with a good performance, liquidity, and capital adequacy. So they have been impacted differently than those we have been stressed before. The shareholder commitment is also a very important aspect. So we see in several countries shareholders which are strongly committed and have already committed additional funds to support the institution to navigate through the crisis. The sources of funding to which a microfinance institution has access is also very relevant. I mentioned deposits, but also there's a huge difference between local and international debts. And of course, then we have, as I mentioned before, and we can go more into details later on, the client base to which the microfinance institutions are exposed. There are risk management capabilities. So this is something I will also go more into details later. And and the government and regulatory support measures, which I have mentioned already. What have we done at IFC in the last months, and what is the state of the situation? So right now, as I can imagine most of you, we have been heavily involved in business intelligence, data collection, and stress testing. So we have been supporting our clients and others to stress test their liquidity, and we have been trying to understand the trends and the impact on the different countries. We are using this information, these insights, to inform our management and to take measures according to the situation in the different countries. We have been involved in policy guidance and dialogue at the national level to support and advise governments on how to support the informal sector by supporting the microfinance industry. We have been aligning ourselves to respond with other investors in the sector because we are aware that no player alone will be able to support and to make sure that this crisis ends. And so we will need to have a general approach to support the microfinance industry. We have been working on liquidity and solvency mechanisms, and we have been, as I mentioned, engaging with industry players and their mechanisms to come up with tools and platforms that can support the microfinance institutions. So thanks. This is for the time being what I wanted to say. We can go more into details on the different global and on the different regional impact, but for the time being, we are heavily involved in the discussions, following the trends, as I mentioned before, and hoping that we can come up with a solution on the global level that can help the microfinance industry in the different countries.
Thank you. And yes, we would definitely love to hear the recommendations because of all the research work and all your, we would definitely like to sort of draw and take away something from you for the participants today. Now, Dr. Nabil, I will come to you regarding Islamic Development Bank's work and the particularly in response to the COVID's impact on the economic the economies actually of the OIC countries. So I'm handing over to you.
Thank you, Alia. I think let me start with some facts. This COVID-19 showed that MSMEs are very vulnerable, right? And they are not very well equipped to survive the effects. Sorry, the effects of such a pandemic or prolonged lockdown. So when you look at the most affected agent of this crisis, you find that MSMEs are really at the heart or at the eye of this coronavirus storm. The sad reality is that these MSMEs represent the backbone of our OIC member countries. And what is more scary for us is that the average number of MSMEs per 1,000 people in OIC member countries represents simply more than the double of the world average. So it means that strengthening the resilience of MSMEs is a key. And this is why actually IDB launched a package of initiatives to support the resilience of MSMEs. But let me share with you a very what's called a very relevant survey. So this survey was done on a sample of different types of MSMEs, and it was undertaken by one of the most reputable Chinese university called Tsinghua University. And it was done during the peak of the COVID-19 crisis, and the results as follow. 2/3 of MSMEs cannot survive more than 2 months. Just 10% can hold up to 6 months and more, which means simply that these MSMEs are so vulnerable and they cannot really even hold up for 6 months, most of them. So if this is the impact on a country that was achieving the world's best GDP for several years, I mean by that China, I'm wondering what should be the impact on our OIC member countries. 40% of our member countries are LDMCs, least developed member countries. And this is why basically, if you ask me about what are the lessons, that we have to learn, is to rethink the classical model of serving poor, is to rethink the model of dealing with the microfinance sector. And this is why today we have really to innovate in terms of models and tools, and we have to work on a paradigm shift from the financial inclusion to the economic empowerment. And this is how IDB now is really, this is what IDB now is doing. So for us, the economic empowerment is mainly the expansion of assets and capabilities of our poor people served to participate and to negotiate and to influence, the accountable institutions that can affect their lives. We have really, to change our perception to these poor people. We have to stop considering them as a burden on their family and society. And also we have to look at them as real potential economic actors that could be integrated in local and international value chains and could be connected with a fair and responsible private sector. And this can be done in practice by removing 6 main barriers. Mainly, we have to offer them sustainable business opportunities. We have to connect them also through this what's called intelligent or smart partnerships with the civil society, with the public sector, with the private sector. We have also, to provide, the basic infrastructure to them, give them access to market, through long-term contracts signed with off-takers, provide them the appropriate funding, and tailor very customized capacity building programs. When we do that, we are empowering people, and we are economically empowering people, and we are strengthening their resilience to go through this kind of pandemics and the crisis and the global recession in general. Now, to share with you some of our intervention during this COVID, because it's very important to inform you that IDB is working hard to launch a global initiative, call it the Economic Empowerment Global Initiative, with the main goal to mainstream this economic empowerment approach I just described it now among our member countries. Now, when we talk about what we have done for our member countries during this COVID-19, we tailored a program called SERVE program, which is the strengthening the economic resilience of vulnerable enterprises. This program was designed to provide immediate and target cash flow support to micro business and SMEs in general. And also this program is supported with an envelope of more than 500 million, and we will mobilize a similar amount from our financial institution. The program is to build the program objective is to build the resilience of this MSMEs to overcome the pandemic effect, and the key outcome of this program is to maintain and or sustain more than 500,000 jobs and support 200,000 MSMEs. Furthermore, SERVE program will integrate in collaboration with the leading provider of blockchain fintech solution in the MENA region. This blockchain solution will allow us to monitor and report on a live basis the utilization of our lines of financing. Also, we designed a guarantee facility, and this guarantee facility also will be launched will be coupled with SERVE program, and will incentivize partner financial institutions to provide financing to target MSMEs to alleviate the pressure and the negative effect of COVID-19 crisis. And the key results of that are to create and or maintain more than 140,000 jobs from financing more than 20,000 MSMEs, and also in addition to the SERVE program in terms of job creation. So these are our initiatives for the time being, Alia, and this is actually the main initiative that we are targeting today is the economic empowerment, this paradigm shift from the financial inclusion to economic empowerment. Thank you, and over to you.
Thank you very much, Dr. Nabil. Now, let's touch upon the operational solutions for the field agents. So with the lockdown around the world, the agents were also homebound and businesses were shut. So, Mr. Ahmed, I would like to pose this question to you about the work that was undertaken by the ICCIA to support the sector's learning and their work.
So thank you very much, Alia. First of all, this pandemic came to all of us all around the world as a shock, okay? So no business owner was ready for it. None of us in this webinar were ready for what we saw, a complete shutdown, okay? And the complete shutdown in terms of business means going down from generating revenues to zero in some cases. And this was a really, really big shock to micro and small business owners all around the world, whether they're in developed or developing countries, in the Islamic and non-Islamic world. Everyone was at a standstill, okay? The first thing we tried to do was to psychologically support these small business owners. And this psychological support was basically, we thought of very trivial things to do with small business owners. Obviously, similar to the webinar we're in now, we went digital very quickly as an organization. So instead of doing local, face-to-face meetups in different countries, we said, okay, we're one family. We have over 8,000 members worldwide. So how can we engage with our members, especially the small business owners, in a very quick and let's say quick manner? So what we thought of through lots of our members, we generated surveys quickly to them. How are you feeling? How are you doing? We got various types of feedback from them. Some of them said we want to make use of this lockdown in learning new skills, okay, which was something we did very quickly. Others said that we want to talk, okay. So we did things like virtual happy hours, and we talked to small business owners in Indonesia, in India, in the US, in Argentina, in Egypt, all around the world. And they were basically, venting out the frustration of I'm not making money and I cannot sustain myself, my livelihood, my family, even my employees. Do I fire them? Do I keep them? What do I do? Okay. So we did this, let's say, a psychological support mechanism very quickly for our members. We did a lot of online learning. We have what we call, we at ICSB, we call them our knowledge hubs. Our knowledge hubs went virtual very quickly. We disseminated as much information as we could to different countries in the world. People were happy, they had the time to learn, to attend webinars, to attend online conferences. We did the first ever completely virtual conference on entrepreneurship education, and we got over 1,100 attendees online. This is normally a 150 person event, okay? But it showed that the people had time to fill and they wanted to do, to learn and to do different stuff. The second thing we did is we started promoting, digital literacy. For some people and some countries, no one knew how to go digital, okay? So we had young people, youth basically, who are very tech savvy, as I may call them, who started doing one-to-one webinars and one-to-one sessions with different small business owners on how to sell online, how to sell through Instagram, Facebook, how to go digital, how to go through e-commerce platforms, how to promote themselves. And the young people have the energy and they're very quick in doing things. So we built on their momentum and how quick they are in engaging young people with small business owners to support them. The second thing, in some countries, we got requests from governments for example, in Indonesia. Okay, how can we support small business owners? It's not only about cash. It's not only about giving them money. It's about basically how can they sell? How can they continue operating? So we gave some advice to different countries on how important it is now to support these owners through matchmaking. We did a first ever virtual marketplace, and we're doing it again by the end of the year. So people at least were still, engaged in their businesses. Obviously, some business owners face this in a very, let's say, standing strong, and some of them grew. Others couldn't take the crush because it was basically a big tsunami which came to businesses, whether big or small, and basically it changed everything around. What we also did was we tried to promote what we call a new dawn for small businesses, okay? This COVID pandemic was a good time for us all to reflect on the types of businesses we're doing. Are we really sustainable? Are we really real in terms of business, And, lots of people, when they face themselves in the mirror, said, I'm not doing something of value. I'm just generating income. I cannot grow. I cannot scale. I cannot do things. So we found that we can basically, lots of people readdress their business models. Lots of people looked at financial security in terms of business. They had no cushion for a pandemic or even a minor incident in their business. So we asked small businesses to reimagine how they would work and reimagine how their business model would work. And this worked very, very well with people. And we pushed, lots of, let's say, less privileged groups. They have issues already existing without a pandemic. So we pushed minorities, we pushed women to really think of, when you look at the future of small business globally, it's a necessity. It's no longer a luxury, because big businesses will not create the amount of jobs people expect. The United Nations predicts that we have to create 600 million jobs until 2030 through SMEs. So if the Googles, the Facebooks will not create these jobs, everyone is going through what we call the fourth industrial revolution. Everything's going to be automated, less manpower needs. So young people graduating this year will face a very dull market. So they need to do something. They need to do a home-based business. They need to get self-employed. So I think capacity building is key. They need to know what they're doing. They need to know that it's not, people think that starting a business is it's something you wake up and do. It's not. It's very stressful. It's tough. A lot of us sitting around the table cannot manage a business day to day because we can't take the stresses of cash flow management. So basically, these people need support. Obviously, finance is a key element, whether it's microfinance or any types of finance. But part of what we did is we have within our knowledge hubs what we call our microfinance certificate. And what our microfinance certificate does, it gives an overview on the history, how it started, how this movement started to microfinance, how to manage microcredit, how to do micro savings and things like micro insurance. Okay, So we looked at, lots of small business owners don't know what type of finance is correct for their business. Okay, do I need a micro loan? Do I need to go to a bank? Do I need to go to family, to business? We try to tell people that there are different tools and options for your financing your business, but with what is the best way for you, depending on how much cash you need, etc. So basic things, like if I can say how to finance your business 101 is what we're doing to create this awareness and to tell people there's still hope. You can still start something. Lots of people lost jobs, got laid off, obviously. And we saw that when this lockdown happened globally, whether it's in the States, in Pakistan, anywhere, the livelihoods of a city comes to small shops, your bakeries, your small street shops. So these people are really part of your security, your social fabric, okay? So these people needed the support. They needed even first to knock on them and say, hello, good morning, how are you doing? Okay, even if you don't buy from. So we try to, through our knowledge hubs, through our certificates, through our training, through our one-to-one sessions in general with the different people, to give them this, psychological comfort and capacity building approach for them to look at this pandemic as an opportunity to really start or grow their current and existing business, whether it's micro or small.
So over here, I'd like to then go back to we talked about mobile payments and we talked about the use of digital. So I would like to get a sense of the literacy levels and the adoption levels within the OIC countries in your experience. Because very recently, I was reading an article in Pakistan, and this was from Finca's CEO, if I'm not mistaken. I could be wrong, so please don't quote me. But it basically said that, most of the debit cards that have been issued out to the microfinance consumers are by and large not used. So while digital has a huge potential to service the ones who are not reachable, especially in the rural areas, where do you see us right now? This question is open to all. Steve, would you like to start?
Sure, I will. Unfortunately, I can't, speak as directly to, the issues in some of the, the IOC countries, for example. But let me give you maybe a bit of a global flavor. Martin mentioned what's happening with ecosystems around mobile money platforms. And, that really becomes the critical issue, right? If a mobile money transaction is just used once, there's just a transfer from the town to a rural customer, and it's not repeatedly used, then, then the use and access issue is, is kind of redundant. But what's happening, and probably the most interesting places to look, are East Africa and increasingly now India. But around mobile money platforms and around the application of information, what you're seeing is the growth of kind of multiple products and services offered, by providers who use the mobile money rails. Our main activity, we have a subsidiary called TaraWorks. I think I mentioned that. It's a customer relationship management software, and it's widely used by almost 90 enterprises now, largely in Africa, East Africa, as the data platform that complements the outreach that companies have with mobile money. So what's happening is things like alternative energy, pay-as-you-go solar, animal waste digesters, clean cook stoves, things like pay-as-you-go water, lending for pit latrines. Companies are offering these kinds of services. They're supporting remote field workers. They're extending loans for the cook stoves or the solar panels via M-Pesa, and they're collecting those loans via M-Pesa. So that then becomes the ecosystem around the mobile money, and that drives a much deeper use and access to these services. I mentioned India. India's main effort is to drive the use of mobile money, largely through converting their large government entitlement programs to digital platforms, right? So whenever you can use the rails of mobile money platforms to essentially, create a wider array of goods and services that reach the rural population, you're going to get much greater use. And that's really the key. And that's what we try to emphasize with our agents, is to start them off as what I say village ATMs. They can pay in and pay out, a transaction. But then we help them to understand what demand there is in the local community for what other services, agricultural lending, savings, e-commerce, what have you. And then we help them become certified to do that work and to carry that work out. But it's all about using the rails of mobile money to do that.
Alia, here's Martin. If I may add to what just Steve said.
Yes, please go ahead.
So first of all, you're completely right. Before COVID, we have seen a lot of accounts and e-wallets which have been dormant, so have not been used. So only a fraction of the digital accounts have been actively used in the past. And this is one of the biggest challenges that we as IFC also see. So on one hand, we see the rise of digital accounts and digital payments, but on the other side, we see that this accounts are in many cases only used for a specific transaction and are not integrated in the normal habits of the people. This is pre-COVID. What we have seen during the lockdown phase, and this is some of the insights that we have found out by talking regularly with the microfinance institutions, is that even in the rural areas where the people are used to go to the agent, due to the COVID lockdown, they have been willing to switch their habit. So I would advise all managers from all microfinance institutions to make sure that you talk to your clients and find out what they are doing to cope with this lockdown situation. So we have seen many institutions which have started alliances with, for example, post offices in Tunisia and so on, where they and the clients were willing to go to the post office and pay, and they were also willing to use an e-wallet to pay their loan. Why? Because they are aware that if they don't pay on time, they will lose access to the financial services. So of course, on one hand, the microfinance institution has to be flexible enough to adjust the repayment schedule to the liquidity cash flow, or to the cash flow, sorry, of the client based on the lockdowns. On the other hand, the client should be aware that he has to continue paying in order to make sure that he has a clean track record, credit history, and that he can access to financial services in the future. So it's an alliance between the microfinance institutions and the clients, where the government, of course, play an important role, but also the ecosystem, as mentioned by Steve, can play an fostering an enabling environment. And this is, and again, talk to your clients, find out what they are doing, how they are managing the liquidity, the lockdown situation, because we have seen in many cases where the management thought that their clients were not willing to use and not literate enough to use this this tool, this e-wallets or some kind of applications. But on the other hand, we were seeing that they were receiving remittances from abroad and then using this money in a cash. But if you come up with a environment solution in which they can keep the money in a digital environment, they are under lockdown situations, and if the product serves the needs of the client, they are willing to keep the money in this system. Of course, it depends on the country, but we have seen huge switches, and there are huge changes. And what we also see, I don't want to go to, with numbers because I don't have enough numbers, but we see that the payment companies have doubled, tripled, and quadrupled their number of transactions. Yeah? This is also supported by many governments. I just posted an answer. I don't know if you can see it. A study done by CGAP. CGAP is the think tank of the World Bank Group in microfinance. They have published an article in September in which they mentioned they highlighted the number of cash assistance programs implemented in several countries all around the world using digital means. And this is also supporting the digitization of the ecosystem, because once the people get the money in cash, they can use, in a digital, through a digital channel, they would be encouraged also to use this digital money to repay their loan, or to use this money to repay other services like utility services and so on and so forth. But okay, it takes time, and I think many players of the different ecosystems have to be involved. Thank you.
Thank you for that. A couple of people have actually been asking questions, so I'll just ask it as a part of right now, and then we'll move on to the recommendation, the one recommendation that I would like from each of the panelists, so that we could sort of take that away as something to take it and work upon. So in terms of governance, a lot of incentives, a lot of new programs and packages have been shared globally. And there are government to consumer, initiatives and tracking of those payments to make sure that they reach the right people. Is there anything other than that that you would like to add to how one can manage and ensure that the funds are being utilized and being shared with the people that they're meant for?
Sorry, just one additional comment here, is Martin. What we have seen in several countries, unfortunately I have to talk globally. I'm not sure if it's in one of the 57 countries members of the ICCIA. We have seen governments who have been paying funds through the microfinance institutions. And why is this important and good? Because they know the bottom of the pyramid, they know the neighborhoods, and they know the people they're working with. And they would also be aware if somebody really exists or not. So working through microfinance institution can be one mechanism. Of course, there are others, and I'm sure that other ideas will come up. But working through the existing banks, the microfinance institutions, of course, they have to have a certain level of institutional maturity to handle this kind of transactions. But this could be a mechanism to make sure that the money really reaches those who they want to reach.
There are a variety of methodologies. At Grameen Foundation, we don't, as a normal course of events, get involved in direct cash transfers, but this situation has made it urgent to do, and we are doing it. I mentioned in the different contexts that we're doing it, and essentially we combine two sources of information. One is through our mobile agents, or the mobile agents that we've supported in our partner groups, MFIs, et cetera. We rely on them and them identifying the most vulnerable people with women's groups, right? So it's using real people to recommend others in their community who need it. And then we use their recommendations then to verify as much as we can activity of who they recommend on mobile money, on mobile phone accounts, et cetera. So we try to combine the virtual and the real, to make the decision for who would get it. And in particular, when it's related to very, very vulnerable people, or very small enterprises, we can get a digital picture too of the people being recommended. There's a whole other group that's doing work in large scale, basically all based on mobile phone information, right, and mobile money account information, and cross referencing that to regional poverty levels, and that's a broader stroke of doing it. It's not as targeted, I think, that we would claim our work is, et cetera. And then many governments, of course, are using their below poverty line indicators as a way of doing it. But the reality is, at the moment, just the cash transfers are a lifeline to to people who are critically poor. And there's a tremendous logic, to fiscal stimulus globally. It's an important thing, to do, and for governments to continue to do it.
Yes.
Yes, I think the Islamic microfinance institutions are less exposed to this kind of risk simply because Islamic finance is very correlated to the real economy. Basically, we don't provide cash. And we are financing inputs, machines, equipments. And so this kind of moral hazard is already alleviated at the beginning, of the transaction. So we have to have kind of underlying assets supporting any financial transaction, which is what's called our basically our guarantee that this money was dispersed, in the right place, and to finance the right economic activity. Because at the end of the day, I don't need these people to come back again more poor and with a debt in their liability. I would like that they use this money, they use this financing in a real economic activity and to be sustainable, and at the end of the day to go to an upper level, which is probably the banking sector or the investment funds, and not stay years and years in a trap of the microfinance institution. So this is number one. Number two, one of the advantages of the Islamic finance is that the microfinance institution, and we have a kind of pilot in this regard, could play the role of a middleman. And this middleman, is creating a kind of platform, e-marketplace between the suppliers and the beneficiaries, and would use the institutional negotiation power, to get discounts from the suppliers, and these discounts will go directly in the pocket of the beneficiaries, simply because most of the time the financial tool used is called murabaha, and murabaha is bay' amana. I don't want to go really in these details, but the financial institution is not allowed to benefit from this discount. So at the end of the day, we are managing kind of e-marketplace. Like, what if he got the input, he got or the beneficiary, or she got the equipment, and she starts working on its own economic activity? She will produce, or he will produce. He can come back to the same e-marketplace as a supplier, right? And present the production in the same e-marketplace as a supplier. So we are managing the risk and this moral hazard, and we are really working hard and closely to our beneficiary to make sure that this amount of money and this microfinance, this microfunding was used in the right place.
Thank you, Dr. Nabil. That was very interesting. And I think that in itself, the Islamic financial products deserves a webinar on its own to talk about how that we can share the learnings from that. Okay, so before we open up for question and answer, I would like to hear from each of you about the outlook for 2021, considerations that we keep in mind, and also one recommendation for the microfinance ecosystem within the OIC countries. Who'd like to go first? Yes, Mr. Ahmed.
Okay, so I think my takeaway from what has happened during this pandemic is basically that capacity building and financial literacy in terms of technology are very, very important in disseminating the microfinance loans to, let's say, less privileged communities, to get people out of poverty, basically. But the issue is normally the technology barrier, accessing, for example, a smartphone. I agree with the speakers about, some people or some companies have reached their beneficiaries through post offices in different rural areas, etc. This is a way. I think that the only issue now, or risk, is some countries have suspended installments for debt during the COVID pandemic. Some have suspended collecting the loans, the payback for 3 months, for 6 months. And this, to get things back to normal and people, for them to come and start paying again, might be a risk and an issue, because some people will think these loans may be written off because of the circumstances, etc. So this is a major risk, that suspending installments, we might have to go through credit restructuring as one of the options, but they need to understand that this money has to be paid back in a way. It's not free or money or a grant in a way. I think technology is essential and is very, very important. Lots of MFIs have plans, they have digital wallets, they have digital products, but what we've been through has accelerated that everyone goes digital. So I think people looking for loans will have a variety of options to think about. I think what we need to also consider is because of the technology, will we see microfinance cross borders and cross, different countries? It's not, is it going to be localized? Is it going to be a global movement that people will lend people in other places if possible? This is something else which will require a lot of regulation, legislation, but it's definitely going to happen. Okay.
Other recommendations, Steve?
Yeah, no, thanks so much. I mean, 2021, I'm worried about it, to tell you the truth. This pandemic is stretching on. It's getting deeper. I fear that both from a political and an economic standpoint, we're just going to see rising, nationalism and the upset to international structures. So it's worrisome. I'll be frank. I think there's some things that we've discussed that I think are strong recommendations. MFIs need to think about how they integrate into digital. Agents, should be able to continue their work and be, I think, classified as essential workers. But in terms of host governments, I think it's an opportunity to really think about building a digital ecosystem. And I would talk about two things. One is the interoperability of mobile money. That's a very big issue. If mobile money, if different mobile money providers cannot reconcile one another within a unified system, it creates a lot of obstacles to the use of mobile money. So governments should really think about how to make mobile money systems interoperable within their own environment. And then, I think the second thing, and this is something that really preoccupies me a lot, right? I'm a very strong believer that information to poor clients and information about poor clients, and that flow on digital platform basically creates huge insights into what's needed and what opportunities the poor have, right? And data at the moment is largely, proprietary. It's largely restricted in use to those who capture it and who, can employ it. That's the essential business model of big tech here in the US, is using digital dust in there as the raw material for driving my behavior, my consumer preferences, et cetera. And I think we're missing a very big opportunity if in some ways we don't find how to use that data, particularly about the global poor, as in ways to leverage more openness about it, more social impact from it, more responsible sharing of it, right, to uplift and to provide, a wider array of ways for the poor to uplift themselves. If data just stays a proprietary resource within, those who can capture it and redeploy it, we're going to miss a very big opportunity and really in the insights that we really need.
Thank you, Steve. I think that is the most important, at least what's really registering with me is the fact that data and the ability to capture it is with the limited few, and so the rest are it's difficult for them to be able to use that. So thank you for that. Mr. Martin or Dr. Nabil, I see you're active.
Yes, thank you, Alia. Actually, I'm exactly like Steve. I'm worried from 2021, and I think the worst is yet to come. And as the world is waiting for a second wave of COVID-19, in my opinion, this microfinance sector would need a kind of complete tailored package in 2021, and MDBs, banks, international or local banks should really tailor this kind of diversified package that includes equity participation to make sure that all the indicators are respected, lines of financing, guarantee facility, capacity building programs that should be used really to assure this digital transformation of this microfinance institution, which is a key to make them more sustainable and more resistant to the pandemic crisis, and not only the pandemic crisis, any other crisis that would come in the future. So this is number one. Number two, I think it's big time to rethink the classical models of the microfinance, and it's big time today to start working on this paradigm shift. As I said earlier, from the financial inclusion to the economic empowerment. Economic empowerment, will contribute to economic growth, to income growth, to redistribution, fair redistribution of the income between the private sector and the poor people. So it's social capitalism. We're not talking here about communism. We're not talking about different models. We are talking about capitalism, but based on fair relationships and on fair distribution of opportunities. So these are my recommendations. Thank you very much. Over to you.
Yes.
Thank you so much, Dr. Nabil. Yes.
Yes. I'm not worried. I'm just concerned about 2021. So I think we are here to also to contribute in managing through the crisis. Of course, the macroeconomic impact will be immense, and we know that, but I see a small light at the end of the tunnel, and I will elaborate on that in a second. But my first recommendation is, coming back to what you said earlier at the beginning, is and it's also in line with what Dr. Nabil has said. It's microfinance is not only about microloans. Microfinance is about more than microloans. It's about a 360 view of the financial needs of the clients, and they need all kinds of services. And we have to make sure that microfinance institutions and banks and other players continue working in providing financial services to this population. At the same time, I agree with Dr. Nabil. I think it's not financial services are an enabler. At the end of the day, we have to make sure that through this financial services, the people might be able to develop economically and engage in the respective economy. So I want to, when we talk about the crisis in IFC, and also when I think about the crisis, I think we have to identify three phases. And I think these are very important phases to analyze the situation and come up with recommendations. So we had what we call the rescue phase, which started in March, and it went up to May, more or less, depending on the country. Of course, in China, it started in December or January. And depending on the country, we have a phase where we had a very strict lockdown and social distancing phase. The impact on the different economies and the impact on the microfinance sector has been huge. And we know in many countries, March and especially April has been the worst month in the history of microfinance and globally in the history of economic development and so on and so forth. But then what we have seen in several countries is that we have what we call a restructuring phase. So starting in May, June, depending on the country, and this is something that you can apply to your country, the microfinance managers and the companies have started to actively manage their portfolio once the lockdown has been lifted a bit. And they have started coming to agreements with the clients in order to improve the collection activities. And they also have been starting to, what I mentioned before, to doing the stress testing, although they started before, but in the first phase, they were more focused on taking care of the security and the health of the employees and the clients. Now in the second phase, and what we call the restructuring phase, they really looked at liquidity projections, capital management, in order to make sure that they are greatly capitalized for the future. And they started with an active preemptive portfolio management in order to make sure that they can restructure and weather the third phase, which we call the recovery phase. So now in the last quarter of this calendar year, what we see in several markets, and I would be interested to know what your opinion is about this, we see many microfinance institutions which are already experiencing recovery. So during the lockdown phase, in some markets, more than 50%, up to 90% of the clients were not able to pay. So the collection went down by 90% in some cases, very extreme cases. And now what we see is that slowly but steadily, the recovery of the loans is going up again. And we see in many cases, many countries, even in Morocco and in Tunisia, that our clients are experiencing bigger recovery rates. And they are almost not 100%, but almost reaching 100% again. So it's 70, 80%. With a very positive trend. So the good news is, which I want to share with you, and this comes, and then my last lesson learned is, the good news is that the informal sector, although heavily impacted, they are reinventing themselves. So many clients have been almost, they stopped their business in May, in April, May and April, but since June, they have been looking for new business opportunities. And now July, August, September, believe it or not, in the rural areas and also in the urban areas, they are now coming up with new business opportunities. Some of them are using e-commerce platforms or other kind of technology-based, very simple and very unsophisticated tools. But you name it, there are a lot of social media. I don't want to name any brand because I don't want to do any publicity, but there are many social networks which are used to distribute products all around the urban and the rural areas. So we see a lot of micro entrepreneurs who are eager to repay the loan, who are eager to make sure that they continue having an open access to finance through the microfinance institution they are working with. So I am cautiously optimistic that although the macroeconomic situation in most of the countries will not recover in the near future, I see that the informal sector, as I mentioned before, mainly also because many people lost their job and they are now opening their own informal business, but also because a lot of those who have been successful in the past, they have reinvented themselves and are developing well. Okay, in accommodation sector, in tourism, there are some sectors which will not recover rapidly, but there are other sectors. We see that in the agriculture sector, the food security, of course, as Steve mentioned at the beginning, food security in very poor countries is an issue. But in other countries, the local agriculture sectors have been profiting from these lockdowns, not in the first phase, because they were not able to distribute the products. And in some cases, they have been giving out their products because they were not able to sell them. But now they are benefiting because they cannot export and they have to provide the food to the local market. So let's be cautiously optimistic, and let's make sure that we can participate in creating an environment in which economic development of the basis of the pyramid, but also the development of the microfinance institution is possible. As I mentioned at the beginning, IFC is heavily involved in what we call the creation of a new type of asset. If we don't support the microfinance institution to weather this situation, the private sector capital, the private sector money will shy away. And then in the future, we won't have the institutions which might be able, which are able to provide financial services. Again, a 360 approach, providing all kinds of financial services to this population. And this is also a very important thing. So we have to support the micro entrepreneurs, and again, they can manage themselves in many cases. So we have to just make sure that the financial services are adjusted to their possibilities. And at the same time, we have to support the microfinance institutions. As Dr. Nabil said, we need to engage as a group, combining the private and the public sector together to help them first with the liquidity management, and then in the second phase with the solvency issues. And then we have to make sure that the new technologies are empowered to become a new enabler within this new normal. Thank you.
Thank you very much. Those were some really interesting and important insights shared by all the speakers. If there are any questions that we have missed, I think we've been simultaneously answering all the questions during the session, so that's been great. I would also like to just add to the outlook for 2021 is that while 2020 was a sudden shock and a surprise and came out of nowhere, I think over the last few months, we've been able to sort of understand what can happen, how bad it can get. And I think all of us are kind of more prepared going forward for next year. So again, thank you, everyone. I really appreciate that you could take out the time. I know Steve has joined us from the US, and it was quite early in the morning for him. So really appreciate that. Before we close, I'd like to talk about our next session, which is going to be about scaling the microfinance. And in that, we will be having discussions with some of the other players within the ecosystem. We will have a participation from some digital players as well. So that is on the 4th of November. More information will be available on our social media network. So do stay tuned in, and we will be circulating. So this webinar is actually available on YouTube as well. So this can be viewed again, and we will be sharing the details via email. So thank you again. I hope this was important and interesting for all of you, and till we meet again, and stay safe, everyone.
Thank you very much.
Thank you very much. Thank you.
Bye-bye.
Thank you.
Bye-bye.
Bye.
Thank you.
Bye-bye.